just have an embarrassment of riches here. We get to have Roman Bogomazov for another session, and we are going to do a chart reading the Wyckoff Way workshop. Welcome to Power Charting. I am your host, Bruce Fraser. Roman, we get to have you for a chart reading workshop. How exciting.
Yes, as always, happy to be here, Bruce.
Well, today we are going to talk about Nvidia, which is just a remarkable chart over many cycles. We're going to look at a few of those. So you can see that this is part one. And with that, Roman, tell us about your upcoming course that you have in the fall.
Absolutely. So for those of you who watched the previous recording, obviously you're already familiar with the curriculum for the Wyckoff Trading course. Just want to emphasize today that the complimentary session, the first session, open door session, will be conducted on August 28th at 3 p.m. Pacific. Go to our website, sign up. Completely free. If you cannot attend it, you could watch it on demand. Just sign up so that we would email you the link to that session, and you'll be good to go. And really quickly, what are we going to be covering? Wyckoff market structural analysis, Wyckoff interpretation of volume and price, and specifically supply and demand, Wyckoff interpretation of the relative and comparative analysis, trading tactics as to how to use our Wyckoff trading plan. All of that during the 15 sessions that are going to start at the end of August into the beginning of December. Each week, we're going to have the homework for you, which is not mandatory, but preferable, and just a lot of work, a lot of repetition, a lot of simulations, and so on and so forth. So I'm looking forward to working with all of you guys.
This program actually follows a college course curriculum. It's that kind of an effort, study on the part of the students over literally a semester of time. And so it's, very, very worthwhile, very important effort on the part of the student to be able to do this. It's more than just a series of webinars. This is distance learning, but this is the way this material is taught at a high level. And so this is a great opportunity, in my opinion. Thank you, Roman. And what are we going to do today?
Yeah, well, we have, we're going to do the Nvidia, and we're going to have multiple case studies. This is specifically the case study of 2018 distributional range. And just to give you some reference to what has happened prior to that, Nvidia has been in the uptrend since, like in the momentum type of uptrend since 2015. So this is the conclusion of this uptrend. And I think, Bruce, in this case study, the main thing for us is to identify how does the transition from an uptrend into the trading range happens, and also how does the idea of the short-term bearish bias develops so that the long-term campaigner or swing trader could take advantage of this knowledge and make correct trading decisions.
This is a most interesting structure, Roman, because you can see this ascent, the stride of the advance that's occurring, and June to November, it's going at a pretty good clip. And then I'm seeing or detecting diminished thrusts from peak to peak to peak. Are you seeing that?
Yes, absolutely. You could see how much progress do we make on the extension of the trading ranges, which are reaccumulations at this point. And Bruce is absolutely picking us up correctly. See how there is a shortening of the thrust. Why would this happen? Usually, a shortening of the thrust would suggest that maybe there is some kind of deterioration of buying, deterioration of the demand. And when we talk about the shortening of the thrust, we say that these are the preconditions for a possible change of behavior that is going to lead us into a possible trading range. Now, once we are in the trading range, then it becomes a question of what is the bias, what is the timing for us to get into the position, whether to the upside as a continuation or to the downside, and what would be the character of that potential continuation or a decline. And Bruce, if I would start extending this even more, I mean, like into the trading range itself, then we're seeing even more contraction of the upward result and more shortening of the upward thrust.
Now, without seeing the entire uptrend, just looking at the way that this is unfolding and losing momentum on a rising basis, this really, I think, suggests that this has been an epically large uptrend in the earlier period that we can't see from this chart, because of the way that it has to lose momentum very, very slowly, because you have a thrust up to the November highs, and you're all the way over a year later to the October highs with continuing ever higher highs, but on a diminishing basis, which really says to me that this is a very long uptrend that's being distributed very slowly.
Not only that, the way how the shortening of the thrust happens, and then every time we still have something, to the upside, we still have attempts to break through the resistance and to push the price higher. So here we're seeing where is the contraction happens: shortening of the thrust number one, shortening of the thrust number two, shortening of the thrust number three. So that usually happens with the momentum type of stocks that were traded heavily by institutions, leadership stocks as well. And with that, the structure of the distribution might take a most peculiar shape. What do we see here? We're seeing that most likely, Bruce, I'm just kind of like going to tentatively label this. We're seeing the buying climax, which is being followed by, a non-threatening change of behavior. Supply is coming in. Change of behavior is suggestive that we're going to go into the trading range. If this is the buying climax with the climactic run, then the prior point is going to be preliminary supply for both reaccumulation or distribution. And Bruce, as we try to test here in the next couple of months, I still would be thinking that my bias at this point will be of reaccumulation. I do not see this increase of the supply as a threatening event. We've seen increases of supply prior to that, and it doesn't produce a very meaningful change of behavior. I also don't see multiple days down with a lot of heavy destruction of the structure either. So with that, being followed by the slightly higher upthrust highs and also higher low testing, I would be thinking here a bias is still of bullish of reaccumulation.
And I would just add to that point that one of the real super secrets of Wyckoff are reaccumulation structures. These are structures that form in an ongoing uptrend, dynamic uptrends, where a momentum stock will go into a sideways structure, maybe with an upward tilt to it, sometimes a downward tilt, and that this represents a golden opportunity for Wyckoff traders to be able to initiate or add on to existing positions and trade for the next uptrend. And so this is what Roman is referring to. And the fact that this is happening as he described it suggests that all the way up here, each one of these upward thrusts, even though it's diminished, is an opportunity to trade the reaccumulation structures that he just defined here with these trend lines, or these support and resistance lines. And so this is one of the absolutely critical tools to Wyckoffians, Wyckoff traders, position traders, swing traders, etc. And so I just really want to emphasize that point. And the other thing that I think is really important, looking down at the relative strength is so important. Note that the relative strength line is respecting the upward sloping moving average throughout, which says to us higher highs and higher lows in the relative strength line says this stock is leadership. And even if the rate of advance is diminishing, those higher highs still say this stock is outperforming the S&P 500 and most of its peers. And that means that the institutions are being rewarded for continuing to participate and add on to their positions in this upward trending stock. Roman?
Then what happens, Bruce, is of utmost interest. Again, here we don't see a lot of distributional presence or presence of the distributional supply. We don't extend too much, so we're definitely concerned about weaker buying. And in itself, it creates those preconditions for a change. So how would change happen? Right, so I'm gonna teach you as if like I'm in WTC1 course. We need to see first deterioration of the demand and deterioration of upward result. Then step number 2, we need to start seeing the emergence of the supply or emergence of selling. And this emergence of selling could also have multiple steps to the actual resolution to the downtrend. What are those? The first step could be as simple as a stop in action. So the supply emerges and does not allow the price either to extend too much, or it just stops the progress, and then the stock or the chart goes into the some kind of consolidation after the stop in action, as it cannot overcome specific level. The second step with the emergence of the supply is the increase of the downward result. And once we see this, what we call this, and I call this law number 4 of Wyckoff methodology, synchronicity. We need to synchronize the effort and the result. So we need to synchronize this emergence of selling with the downward increase of the downward result. And this is our timing tool as to when we should go in and start exploring opening the positions. And Bruce, just based on this, when I look at the emergence of the supply, let's say in this area right here, and I look at the result, I don't see a significant result to the downside. It still holds here. So this is my mental note that for multiple times now, we had the emergence of the supply, and that emergence of the supply produced something, but it wasn't as strong to the downside as we needed to be for the change of behavior. And only in this area right here, where we're seeing first supply comes into the high, and that stops the movement above the resistance. That's number 1. Second increase of the supply already produces the best reaction that we have seen on this chart altogether, I would say. I mean, maybe there is some kind of resemblance to this, but as I look at how it unfolds, the verticality of this drop increases, the momentum increases, the velocity is increasing, supply is increasing, the downward spread is increasing, and we're quickly negating in 1, 2, 3, 4, 5, 6, 7, 8 bars everything that happened here. So imagine in 8 days, we are covering the distance of all of the closes for the last 5 months. This is significant. And therefore, this becomes our change of behavior. And with this change of behavior on the way out of the trading range, this is where we would be thinking about any type of positions. And Bruce, I actually recall that my position in Nvidia here was opened here on the breakdown on this particular bar. My expectation was that behind the market action, and you have to go back and revisit this, market was already experiencing a change of behavior plus the downtrend. And with that, you're looking for stocks that are also exhibiting a change of behavior and you want to go in here and establish this position. Bruce?
This stock was an institutional favorite at that time, and so they had substantial allocation, inventory of the stock, and it takes large institutions that have large exposure to a momentum stock like this time to distribute their shares, and they want to do it stealthily, carefully, without driving the market down. You can see the diminishing thrusts upward with the volume coming in off the peaks, which do not result in a big breakdown, as a sign that there is distribution on a scale up as this market is stock is working its way higher. And so that does not mean it's time for the stock to go down. What will happen often with the CO types is they'll sell off the peak, but then they'll suspend their selling because they don't want to drive the stock price down too far, because they need it to rally again so that they can sell more stock in the final stages of the advance. And so these are early clues about the intention of the CO on a scale up on diminishing momentum, diminishing thrusts. And you can just see that it took all of the year to be able to accomplish this feat. And then when the distributional job was nearly completed, it was able to do just what Roman pointed out, was to be able to turn off of a very brief upthrusting action to a very minor new high. Volume starts to come in off that peak, and that becomes what we call an upthrust after distribution. It means just what it says. You get an upthrust to a minor new high. It's after distribution has taken place. Typically, the response to that is to have the stock or the index start to break down easily, big spread, high volume on the way down off that peak. And it goes right to support very quickly, as Roman just pointed out. So, Roman?
Another thing here, once we've concluded that the market is favorable for the decline in the leading stock, and we've just experienced this change of behavior and the potential last point of supply, is just to consider what kind of character we could potentially have. Excuse me, guys. Now, this was a not necessarily that challenging of a task at that point of time. Why? Because the market is actually was showing that it's weak, and that there's going to be some kind of continuation to a downtrend. That's number one. The second thing here is that usually during the first leg of the downtrend, of the market downtrend, so let's say like in September, October, so if this is the first leg down for the market, you're gonna see institutions selling what kind of stocks? Probably lagging stocks, right? So laggards. And with that, once this is done and the market still requires more selling to the actual final capitulation, what will be sold next? Next will be the selling of the leaders. And Nvidia was one of the leaders. So we know that the timing of it is correct for us to establish this position. And therefore, start thinking about the character. If the timing is correct, then what would be the character of this decline? I would assume that by the sentiment of institutions that do not want to depart from their core position of the stock that has been so good for their portfolios, then they probably would be starting to sell more on the right side of the trading range than on the left side. With that, with the accumulation, with so many of the institutions selling, this is going to increase institutional supply. And as supply increasing, then we could expect some kind of increase of the price spread to the downside. and we also could expect increase of the momentum. So I'm expecting a really quick move to the downside here. And the goal here, Bruce, I think, is just to understand where we could land. What would be the support for us? What could we break? I would say probably this anchor
Yes.
point is extremely important, right? Just because of the...
Very important. And also note how the long-term 200-day moving average that Nvidia, even though it's making higher highs, which keeps traders and investors and institutions complacent in the stock. Now, the CO type is really a high-level performer in the institutional space. You want to make a distinction between them and most institutions. What I see here, especially with the upthrust that occurred at the beginning of October, also produced a new high in the relative strength. And to have that sudden breakdown, I think was startled investors and institutions with the severity of the decline off that peak and how quickly it came. And so I could see how this would produce rapid selling very quickly among very large holders.
Right. And that's what we're expecting. Okay, we're gonna go bar by bar. So I'm just gonna quickly redraw the levels that we're interested. So support level number 1 behind this volume signature, support level number 2, and there is a cluster here because this is also very important resistance. So here's our support level or support cluster number 2 and maybe number 3. Now we're thinking about a rapid, very quick momentum type of move. So right away, I'm thinking target number 1 is too close. Target number 2 probably gonna produce some kind of rally, and we could use target support 1 as a potential resistance 1. So kind of like push back to 50, maybe like 2 attempts, and then continuation to the capitulation. So I'm thinking that my trade either gonna be just a short-term trade to the first level of support, or if I'm willing to hold on to this, then to the third one. And I will define along the route what kind of intensity we have here for us to consider whether we should go to support number 3. So why don't we just go bar by bar here, Bruce?
Okay.
And see how it develops. Okay, so gap down, still volume is pretty heavy, so we're staying. Okay, it looks like a capitulation bar, but look how it goes to the support number 1. The aggressiveness of how it approaches this level suggests more to the downside.
Yeah.
Okay, so here's attempt to recover.
Yeah.
Okay, and we come, I apologize, feel like this level's correct now. Yeah, somewhat correct. Yeah, so see, guys, how we just judging the market by its own action. As the price unfolds, as the level of volume is being known to us here, we are adjusting our strategy. Now I'm thinking like, okay, this is pretty cool because we had an increase of the momentum here, but we have even more increase of the momentum here.
Yeah.
So therefore, I'm assuming that here, this is important cluster 1 and 2, we might have some kind of rally again to maybe like 50, and then continuation to the downside to target number 3. So let's hold on to this position.
Okay.
And let's
just pointing out that this is a peak at around $72, and it went to around $43, $44 in that last down bar. And so look how rapidly that happened.
Yeah,
which just
insignificant
confirms,
decline.
Yeah, it just confirms that distribution did occur prior to that on a scale up. And now Nvidia is in the markdown phase, which occurs after distribution is largely complete.
Okay, so again, we're expecting some kind of bounce here, maybe to 50. Okay, well, here it is. Okay, even more, 52.25. I still would be thinking at least a retest. So let me just kind of like see this. I'm going to clear this up so that you guys would see this. Okay, I'm still holding here. I don't see how we are overcoming this breakdown. So this is the key for us, like 57.5. That's the level to violate to the upside. I might be even thinking of maybe even adding here if the price goes back through 50.
Now, what Roman is doing is classic tape reading, which is volume spread, price spread analysis. And he and William actually do a weekly webinar series on this. And it's just, this is true classic Wyckoff. And this is what he called tape reading. But go ahead, Roman.
Bruce, I would consider maybe just even adding to the position right here at 50, just thinking that at least at the minimum 45, 46 will be retested. That I could close this with maybe like, you know, $3-5 profits as a pyramided position. This bar convinces me that now we're probably going to break through. Maybe another attempt to rally, but not to the as high as 55. But you know, this adds confidence to me, so that the second unit was opened correctly. Attempt to rally. Oh, beautiful.
Yeah,
I love those type of scenarios. So here, Bruce, I wonder what your thoughts on this particular close. The volume is elevated pretty high, not, you know, abnormal. We have a big gap, definitely climactic, but there is still some momentum to the downside, and we have another target lower at around, you know, 34, 35.
it's very hard to stop a decline like this, and people might characterize it as climactic, and certainly it has those kinds of qualities to it, especially with the very high volume. But with the momentum that it's dropping, I would be inclined to see if there isn't some follow-through days. You should see some diminishing thrusts on a downward scale if it's trying to ultimately find a bottom, maybe somewhere near that support level.
All right, so we're still holding on to our now 2 positions because we're pyramided. Okay, and we are instantly rewarded.
Yeah.
And here I
That's
probably
a terrible bar.
a terrible bar. It's a beautiful bar for us, right?
Yeah.
So we've coming in here, point of entry number 1, point of entry number 2. And here I would be thinking like I am not actually adverse to taking some profits here, Bruce. Why
Yeah,
not?
well, you're in key support.
Yeah, key support. The volume
It's
is
just been cut in
climactic.
half. The stock has been effectively cut in half.
Yeah, so I would say like this is exit number 1, and you have a profitable trade. You could put your stop loss somewhere here or somewhere here and just see what's going to happen. You know, as Bruce has said, now we're looking for the conditions that would show us some kind of change.
And I would also say, Roman, that we need to see if we are dealing with a true selling climax. And I'm not convinced. Often selling climaxes do have elements of demand in them in the course of the day where that occurs, but also should have a very sharp automatic rally that follows. And I would want to see that to confirm. And typically after an automatic rally, you go back and retest those lows again. And so, and of course, we have no evidence yet that that's occurred.
If I'm trading options, which I often do, more often actually than just, you know, cash positions or anything of any other type of assets, I would be considering exiting almost fully here, or the majority of my options position, because of what just Bruce has said. Imagine we have the next day maybe like a contraction of this, a contracting spread, and then the next day we might have a spread like this. This is going to eat up almost majority of your profits, not all of them, of course, but still the premium on the put, on the directional put is going to collapse drastically on a bar like this.
You're so right about that. And
So yeah,
you have to have the context of the vehicles that you're trading in mind.
Absolutely.
As you consider your tape reading tactics.
And Bruce, Wyckoff concepts allow us to think this way, to develop this logic like this, right? Because also the premium expands behind the increased volatility and increased volume signature. So with that, this could be one of the most favorable spots to just close out options position
And as
altogether.
fear is intense, it increases the put the premium values of puts. And so there's two ways that you can come out ahead trading puts on a really steep decline like that.
Yeah, you're probably referring either to the overall exit, as I mentioned, or creating a counter position here, starting maybe like, you know, putting on some directional call, so you could, you know, still, you know, sell puts or start selling puts. I'd still say momentum is a little bit heavy here, so we might see slight continuation down to 34. So let's just finish this. Okay, well, here it is. So on a bar like this, what you're gonna do is you want to preferably exit here just because of that support number 3 that we've identified, or take some profits here. And then as the price starts to retrace up, then you want to start having your stop losses, you know, however you move them, just get
and
out.
that is characteristic of a selling climax in the regard that it opens very weak, panicky selling, very high volume, widespread, and then to the end of the session, it can find a bid and starts to rally up kind of towards unchanged on the day. That's exceptional amount of work that was done to lift that off those lows.
So maybe some kind of retest, you can sell more or close the position at the retest, but probably like here and here, Bruce, I'm probably already out. That's a
great campaign. Yeah,
yeah, my actual trade at that time was not as successful. I only picked up this this part of the trade. I did not, yeah, I did not go all the way down. There were some other things at that time. But let's just see how it finishes. Okay, so we're kind of seeing, yeah, that was the climactic
rally.
Yep. So, but this was the climactic stop in action. So I believe that there was maybe one more attempt to go down. Yeah, here it is. You could do this and you could wait for the secondary test here to get out if you didn't get out here. But again, this is a much more efficient way to get out. Why? Because you don't have to stay in this position anymore. That's it. You extracted the majority of profits here, and then you could just emotionally relax and just start concentrating on something else. Bruce, this was a great case study.
Wonderful case study. I love it. Thank you so much. And by the way, we are going to now, or in the future, we're going to do an Nvidia case study for accumulation and continue on with this because we just think it's a very rich case study. And as you can probably tell, we love doing these. And there's just nothing that is more valuable than doing these historical studies and doing the bar by bar analysis. And we want to do that with you. So let's do this part 2 next time, Roman.
Absolutely.
And
thank you so much for inviting me. Yeah, that was fun.
Oh, so much fun. Always fun to do this with you, Roman. And we want to share this with everybody. So tell your friends, watch it a few times, and then consider coming to the free session that Roman does for his first class of the upcoming semester. And with that, Roman, thank you again.
Thank you, Bruce.
We will see you next time. Take care, everyone.